no matter how you look at it, there is data out there that tells us that silver is behaving differently than past cycles, and its industrial side is changing its trajectory. So in that context, it makes me a bit nervous. I still like it. I'm still bullish. I'm still willing to buy a great silver stock if I can find one. And that's the hard part, the finding a great one. But I have to say I'm more confident in gold. I see it as less risky in front of the recession. After the recession, I expect to have a greater emphasis on finding more silver stocks in my portfolio than gold.
Lobo Tiggre, founder of Independent Speculator, offers valuable insights into precious metals, mining stocks, and speculative investments, reflecting current global economic trends. As economic uncertainties loom, Tiggre shows increased confidence in gold as a safer investment in anticipation of a potential recession. This perspective aligns with gold's historical performance during economic downturns, reinforcing its status as a safe haven asset. Gold's reputation for resilience during economic downturns is well-founded. Thanks to its consistent global demand, it tends to be less affected by recessions than other commodities. This was evident during the 2007 stock market collapse when gold saw a significant surge in investment demand, doubling in value from 2007 to 2011. Lobo Tiggre notes that silver has recently begun to behave more like an industrial metal, a development he views positively. Despite this shift, silver remains crucial as a monetary metal and safe haven asset. Supporting this view, the Silver Institute projects an 8% increase in industrial demand for silver in 2024, driven by the growing focus on green infrastructure and favorable government policies. In 2023, industrial demand for silver hit record levels, rising 11% to 20,353 tons. This trend is expected to continue, with a forecasted 9% growth in industrial demand for silver in 2024. Looking ahead, Tiggre predicts that, on the other side of the recession, once we're sure that any potential downside due to the industrial aspect is off, silver becomes a win-win metal. Before we start with the video, subscribe to our channel and click the bell icon to stay updated with all our latest content. Subscribing ensures you won't miss any of our new videos.
Yes, I am bullish on silver. My thesis that got me called Darth Silver was never a bear case for silver. It was a future-looking case about whether or not silver will actually ever go back into circulation as money, since digital receipts solve the problem of making change for gold. I'm not sure that it will. But set that aside. We can let history decide that. Silver has been acting more like an industrial metal. Clearly, its industrial use case has changed and it really exploded. I actually see this as a good thing. That hasn't made it stop being a monetary metal or a safe haven asset. It still works that way. But it also has this other possibility. I think on the other side of the recession, once we're sure that any potential downside due to the industrial side is off, I see silver as the win-win metal. I think both the monetary and industrial aspects in an inflationary environment where the powers that be are blasting with the money bazookas left and right, I think silver does really well. Oh, and by the way, it's an essential part of the green agenda too. So whether you like that or not, it's happening, right? And it's another tailwind that really doesn't affect gold, but is a tailwind for silver, big time. All of that said, last year silver did correlate more closely with copper than gold. That's just a mathematical fact. You can do the numbers and look it up. The good news is that silver has been tracking gold more again this year, particularly on, it's interesting to me, on like geopolitical events where fear makes people go into the dollar and gold at the same time. Silver tracks gold then. So the world is still treating silver as money, which is good. But it has been underperforming, right? We keep getting nominal all-time highs in gold, but we haven't had a new nominal all-time high in silver yet. I was just talking with David Lynn, and he showed me a chart where it looked like silver was correlating more with gold than I had thought this year. So no matter how you look at it, there is data out there that tells us that silver is behaving differently than past cycles, and its industrial side is changing its trajectory. So in that context, it makes me a bit nervous. I still like it. I'm still bullish. I'm still willing to buy a great silver stock if I can find one. And that's the hard part, the finding a great one. But I have to say, I'm more confident in gold. I see it as less risky in front of the recession. After the recession, I expect to have a greater emphasis on finding more silver stocks in my portfolio than gold. But right now, in front of the recession, I'm trying harder to get more gold in there than silver.
Lobo Tiggre suggests that skepticism towards gold miners and stocks might wane as the market evolves. He highlights that gold is currently at nominal all-time highs, and a 20% rise from this level could bring prices close to $3,000 per ounce. Echoing this optimism, Akash Doshi, head of commodities for North America at Citi Research, projects that gold could reach $2,600 by the end of 2024 and potentially hit $3,000 per ounce by mid-2025. This forecast is supported by expected U.S. interest rate cuts, strong demand from exchange-traded funds, and significant over-the-counter physical demand, bolstering the case for higher gold prices and reflecting growing bullish sentiment in the market. Lobo Tiggre observes a growing interest in gold among young people. As an economics and entrepreneurship teacher, he notes that his students, who are typically indifferent to cryptocurrencies and other investments, are now inquiring about gold due to its record highs. This trend is reflected in recent data. A Bank of America private bank study finds that 45% of wealthy investors under 43 own physical gold, and another 45% are interested in acquiring it. Naturally, when assets show strong returns, younger audiences start to take notice. Supporting this, a State Street study reveals that millennials allocate the most gold in their portfolios, 17%, compared to 10% for both boomers and Gen X.
Well, first and foremost, I think it's a mistake to just look at the indices. And sorry, but it's a stock picker's market. And, I have done better than the indices this year. The gold stocks, even with the indices, they have responded to gold. They haven't delivered the kind of leverage we'd like to see so far. There's a free article on my website called Are Gold Stocks a Broken Asset? Or Are Gold Stocks Broken? Or something like that. It's a free article you can search for on the website. But I make the point that, and this is also a Rick Rule thing, in some ways the industry deserved the discount. They failed so spectacularly to deliver for shareholders in the early aughts, right? The ramp up from 258 to 1911 gold from 2001 to 2011, right? They failed so spectacularly to succeed in the actual business of mining gold and making money for shareholders that it's not unreasonable for investors to look at them with skepticism now. And so that's another interesting thing, and I think a particular source of opportunity, because the stocks and the companies facing the skepticism, they have not really moved as much as we would think, expect, or hope as speculators, but I think they will. In Q1, we had the biggest gold producers in the world. They all beat expectations. We're into Q2 now, and we're starting to see good results too. So I think we're getting to the point where even the Warren Buffetts of the world could look at the gold mining business and say, I get it. That makes sense. They have these producing assets, the margins are increasing, and there's a huge moat. It takes years and years and years to explore, permit, build another gold mine. So it fits, in my view, that Warren Buffett-y sense of looking for a great business that competition can't just jump in and swamp them out. And in a context where, if I'm right about gold itself going up, then that moat is highly relevant. Your competition, let's say even if you have a mothballed gold mine, you're an existing miner, you've got the know-how, you've got people on staff, and you can go back into production lickety-split. Well, in the mining world, lickety-split means like 6 months or a year. So, that moat is tremendous for the people that have the goods now, the profitable miners. So I think we're in a situation where we may see that skepticism about the gold miners and the gold stocks fall away. And if nothing else, just, we're at nominal all-time highs now. You start going way above that. I mean, a mere 20% rise from where we are now takes us almost to $3,000 an ounce. That would have screaming headlines left and right. That would have generalist investors saying, how can I jump in? Even young people, Elijah. I don't know if your friends have talked to you about it since you do this sort of thing, but I teach economics and entrepreneurship, and young people are interested in gold. They're not religious about cryptos or this, that, or the other. They're just looking for things that will work. And headlines about all-time highs in gold have them asking me questions that they never asked before. Suddenly they want to know about gold. So now imagine that going forward if I'm right about the other things that I've said. So I think it's actually, I know that it's going out on a limb. Yes, it's speculation. My publication is not the independent sure thing can't lose ever.com, right? It's the independentspeculator.com. I think it's a fantastic speculation. When the underlying asset is already showing huge strength and the securities are still lagging behind, that gives you a chance to buy. You're not buying high and hoping to sell higher. You still have a buy low opportunity.
gold and silver continue to be pivotal and appealing in today's market. Gold's robust performance and predictions of reaching new highs solidify its role as a dependable safe haven asset during economic uncertainty. On the other hand, while silver is increasingly acting as an industrial metal, it remains a crucial monetary asset and a valuable resource across various industries. How do you manage your investment balance between gold and other assets? Share your thoughts or questions below. If you found our analysis of gold and silver trends insightful, please give us a thumbs up. Thanks for watching.